What is up everybody, Gifford here and welcome back to another stock market video. So today we're going to do something a little different and I'm going to show you how to get over 100% returns in the stock market using options trading. But as you see in the title, it's maximum risk. There's 100% return but you could lose all your money and this is not investing. So I'm going to show you how to do that. Seeing this is my channel and I'm not a financial advisor, I'm just merely showing what I'm doing and you can see here how I'm achieving these 100% gains. But I want you to be 100% sure of yourself that this is fully risky and you could lose all your money, and I'm totally fine with that. So it's up to you whether you want to follow it or not, but this is not a recommendation, this is just what I'm doing. So with that out of the way, hit like if you like the video and feel free to subscribe, otherwise let's get on with it. So in this video we're going to go over how to get 100% returns annualized over a year, which equates to the highest risk. So be sure to understand this is not investing, this is gambling your money. We're going to go over exactly how this works, the initial investment that you need, the time period, and also the numbers behind the math. And this options trading strategy is all about doing the wheel strategy on high volatility stocks. And you're probably wondering, why do options over a normal buy and hold long-term strategy? And so the beauty of options is that you can mitigate risks due to high risk trading. Basically you have a fixed income and fixed returns with options trading. And if I'm going to be participating in gambling my money away in these high risk stocks, you can actually use options trading to lower that risk. So you can get really good reward, but you can also minimize risk with this strategy. And the other thing with options strategy is you have control over the fluctuations of the stock price and also if there are macro market environments. So in this video I'm going to show you two things of how we sell the put and the call options and also calculating those returns, and then I'm going to show you an actual trade that I did on Interactive Brokers, which is the platform I use. So this stock that I'm trading in is AMC Entertainment, ticker symbol AMC, and as we know AMC is a meme stock, so this is why it's 100% gambling. So why do I say this is high risk? So what we're going to do is we're going to get into Simply Wall Street and then I'll go over the summary, the valuation, its future growth and the financial health of this company. So AMC Entertainment is all about movie theaters, and we can see in the positives is that the revenue is forecasted to grow 17% per year. However, the big negatives are negative shareholder equity, currently unprofitable and not forecasted to be profitable in the next 3 years, which is very bad. Also, the stock is very volatile over the past 3 months. It's also been very volatile over the last 12 months as well. And a very bad one is there has been significant insider selling in the past 3 months, and the people that are running the company are actually selling their own stock because probably they think it's too much right now because of how it's been pushed up. And just showing you the price action of where AMC was a year ago, it was about a $8 to $9 or $10 stock, and we can see it jumped all the way up with a short squeeze up to $62, and then it's slowly been trending down again. And we can see here about 15 days ago it was around about $13-14, and just of last night of filming this we can see that it's jumped up to just below $30. And looking at Simply Wall Street's valuation, we can see that they think it's overvalued by 6,810%, so the current share price is $23.33, and they think its fair value for the company right now is 42 cents, so that's quite significant. And we can see here for future growth they see there's 92% forecasted annual growth rate, and while that looks impressive, that's actually because the earnings have actually gotten really bad. And if we go to here we can see that the revenue is $2.5 billion a year, but we can see that the earnings, it's actually negative at $1.26 billion. And if we move ahead to the end of 2024, we can see that they will be estimated to make revenue of $5.38 billion. However, the earnings are going to be negative $58 million even in that time from these projections. And looking at the financial health of the company, this is the main reason why I say this is actually very risky, is because its short-term liabilities are negative and cannot be met, and also its long-term liabilities are also negative. So usually this is not a company I would invest in for the long term, but later on in the video I'm going to show you why I do invest in it using options trading. So over at Tip Ranks, having a look at the price targets for AMC, we can see that they have a low price target. This is 1 year price target of $6, an average price target of $9.83, and then a highest price target of $16, and it's pretty much double that. So you can see here that they're not really keen on AMC at all. Street targets for this, and they have a mean price of $10.45, a medium price of $6, and they have a high price of $35, but also a low price of $1, so it doesn't look too good here as well. So now you have a basic understanding of why AMC is very risky. It's because AMC is a meme stock with high retail investors pushing the price up to combat against hedge funds shorting the stock, which means the hedge funds are shorting it because they want it to go bankrupt. So the most important thing of why we're actually here, now that the risks have been understood, is how can we make money from this using options trading. So high volatility stocks and the share price means good options premium, so they pay if you participate in selling options. This is how we're able to generate 100% annual returns, where we can use the wheel strategy. And if you don't know what I'm talking about, then I'll put a video link right now somewhere on the screen here of how you actually do a wheel strategy. But moving forward, basically what we do is we sell a put option, and then when it comes up to expiry, expiry of that put option, we can either roll it or we get assigned those shares. After, say, we get assigned, we can then do the wheel strategy by selling a call option, because we now hold 100 shares of that company, and by selling call options we then get paid premium. So now I've explained how that works. What we're going to do is we're going to go into Webull, and I'm going to show you an example of how I sell a put option. We're then going to calculate the returns of that put option, which is the formula for that is the premium you get paid, and so that's the money, the little bit of money that we get paid for doing the option, divided by the share price. You multiply that by 100% because it's a fraction, and then what you do is you multiply that by how many weeks you're actually going to do that, because what we're doing is we're saying, okay, we're going to do this over the whole year. What is our annual returns going to be? And as options traders, what we try to do is we also try to beat the index. So as long as we're trying to beat 10%, that's very good, but obviously we want to beat higher than that because there's a lot of risk with options as well. So you want to try to get at least about 20 to 30% annually from your portfolio returns. And by selling a put option, you need to understand that you need to have capital set aside, because what you're doing is you're saying, I'm going to buy 100 shares of this company when it hits the share price. We're going to then get premium, and then we calculate that over annualized to compare it with all the other trades that we do. So typically with options, if you do divide the premium by the share price, you usually get a return of 0.03% for safe ones, and then anything over 0.5% per the week is actually risky. So after we do the Webull example, what I'm going to do is show you a screenshot of my actual trade that I did at AMC at the beginning of the week, just to show you how that works and how I calculated those returns. So over in Webull, we're looking at the AMC chart, and you can see it skyrocketing all the way up to $72.62. So pretty crazy stuff. Look at this price action. Totally a meme stock. And we can see that the two massive candles just from yesterday have just pushed it really sky high. So yeah, pretty volatile stock. But anyway, let's go into the options trade and let me show you what's going on. So having a look at the options table, we can see here that it says puts on it, and this is the options table, and what we're looking at is the expiry at the end of this week. So this is a weekly, although we are doing it in the middle of the week, so there's only a couple of days left, but it's going to show you really the power of how much money you actually get back. So the current price at the moment is $29.33. So for example, if you were just to buy the stock because you're really bullish on it and you wanted to own the company, all you have to do is times 29.33 by 100 shares, and then you would own 100 shares, which is 2,933. So the good thing with options is, so for example, you do want to own the shares, what you can do is get paid a little extra by getting a premium. So at the end of the week, which is a Friday in the US, what you can do is say, I'll buy 100 shares of AMC for $29. So if the stock price is less than $29, you're then going to buy the shares for $29, because that is what the contract says. So say for example the stock drops all the way to $20, unfortunately because you did this contract, this is the risky side of options, then you have to purchase them at $29. That's just the way it is. But for example, if it just drops down by a little bit, say hovering around 29, then you actually get paid a premium when you do this trade. You get paid $3.80. Now remembering that this is options, so therefore that $3.80, then you multiply that by 100, it's actually $380. So you're getting paid $380 to say, hey, I want to buy these shares at $29 if it happens to be $29 or lower. So bringing up the calculator, let's just work out what it is. So you do $3.80 divided by $29, times that by 100, and so that's 13, and then you multiply that by 52 weeks, imagining that we had 52 weeks to be able to do this on this options trade. So multiply that by 52. It then shows that this option is a ridiculous 681% return. So just before you get excited, it's not always that high, that return, because there's a thing called IV crush that happens, and that's really around volatility, but it's not for this video. I'll explain that in another video later on, okay? So this pretty much just says that if you're going to continue to do these options for a whole year, you're going to get your money back 6.8 times over again when you do this. So what I've done is we're going to look at another example where I've looked at next week's options that expire on the 8th of April, just to see how much you get paid from there. So let's start all over again. I'll just clear this. Paid $5.05 for this. So let's calculate, see what the returns are on this. Maybe it's just last week that you get ridiculous returns of over 600%. So let's calculate this. So this one's 5.05 divided by 29. You multiply that by 100%, and then you times that, so it's 17, and you times that by 26, because it's for 2-week options, and then obviously there's 52 weeks divided by 2 is 26. So this one again is still very high at 452%. 8%. So if you do these options and you're playing in these very risky stocks, this is why the risk is very high, but also the reward is very high. Right, so let's just pretend I have 100 shares in AMC and we get assigned. So to complete the wheel strategy, let's just say we now own 100 shares of AMC. So let's just say we buy them for $29 and the share price is actually $25. So they end up going down by quite a decent amount, about $4 per share, and that's just the risk we take. But now that we own the shares, if you were just to buy the stock, then obviously it's gone down by that much, so you've lost 400 US dollars, let's just say. So it's gone down from $29 to $25, you've lost 400 US dollars. Now with options, you can then sell a call option to say you're going to sell these at a set amount of price, and you also then get paid a premium back. So these shares were actually cheaper because you got paid the initial premium of the $380 to be able to make that bet. So it's actually almost paid for the amount the stock has dropped, and this is why you can really mitigate risks with options trading, especially in these high meme stocks. So having a look at Webull, we can see that I did a call option, and in the call option, let's say we're going to sell them for $30, and we're going to say, hey look, someone can buy them if the stock price goes up for $30, and we have a look here and someone is actually willing to pay $5.05. So let's have a look at what the yearly return is for doing a call option by selling these shares. So 505 divided by the share price, which is $30, multiply that by 100 and you times that by 26 because it's every 2 weeks, and again the return is over 400%. It goes to show you that while you own the stock and the price has gone down, you can actually make passive income. Although this is risky doing it at this price range, this is why I do options. So on the screen here shows me my actual trade on AMC, which I did last week. So you can see that the volatility wasn't that high last week. But anyway, I sold a $18 put, which was paid to me, and I got paid 58 cents for that. And that was because the share price was at $20. It wasn't near $30 like it was today. And the contract was to buy 100 shares, and the capital I needed was $1,800 because the share price was $18. You multiply that by 100 because we're doing options, and that's why you need 1,800 US dollars to be able to do that contract. And you can see on the left hand side here that I did do that. So let me get my mouse and we can see AMC, I did that and I sold one contract, and here's the expiry date. So it expires in the 1st of April, so at the end of this week. And we can see that the annual returns for that is 168%. So it's still pretty decent. It's not the 400% that we worked out there before because the volatility was low, but 160% annualized for this trade is very good. Basically, if you had $10,000 that you were able to throw at this at high risk and you're willing to lose, you could be generating 250 US dollars to 300 US dollars a week just on AMC. And the screenshot here on the right is just confirmation of me selling that. So one size of put option that expires on the 1st of April, and then I got paid 58 cents, but we know that it's $58 and then the net amount, so there's the $58, and obviously you got to pay the commission to doing these options, which is $1.05. So that is how you get over 100% returns while doing options trading on meme stocks, so very high risk. So just a summary here is only do options on stocks you want to own. So I'd be happy to own AMC because I think this meme stock is going to keep going on, and we're just going to have these big rises and these big falls. Obviously this is not investing, and I know it's gambling, so I'm totally happy with that. And the main reason that I personally use the strategy is to build passive income. So with that $58 that I'll get, I'll then go buy other stocks that I really like Tesla for example, or maybe on semiconductor, much more safer, that I consider value stocks to then grow into the future for more money. So I just use this to generate passive income. Another piece of advice is to make sure you do not mix this strategy with your buy and hold long-term stocks. So you don't want to be buying in and out of your long-term stocks because you're wanting to keep those long-term stocks for 3 to 5 years, and this is really just short-term option strategies. Again, I just want to point out this is just high risk, and I'm just sharing what I'm doing. This is not actually a recommendation for anyone to go follow me. I'm just showing you how you can actually achieve over 100% in options trading. If someone like me can figure this out, it just takes a little bit of time, and you can too. Just make sure you understand and you put the work in like I have. And AMC is not the only company that I do options trading in to generate passive income, and the main reason I need to generate this passive income is that I don't really have a lot of spare money left over after my family and bills and mortgages and all the stuff I've got to pay for. So with my actual trades, this is just the beginning of how I'm playing with AMC. What I'll do later on is I'll update you guys and do sort of another video, and we'll go over and track this for many months just to see if I actually make money out of this craziness in the stock. Anyway, that's it for this video. Thank you very much for watching. As always, don't forget to hit like on the video if you like this sort of content, and feel free to subscribe if you're into personal finance, property investing, and also my stock market journey. Again, if you want to invest in some of these platforms and want to get into investing yourself, yourself, feel free to have a look at my referral links down below. If you want to get into options trading, which is more serious, then you may want to open up an Interactive Brokers account, and there is quite a decent entry barrier to get into options. You need about 5,000 to 10,000 US dollars. That's what I would recommend, so then you can do options in good quality companies. Again, the link is down below. If you have any questions, feel free to ask or message me directly, however you want. So if you want to hear from me midweek, feel free to follow me on Instagram. I'm there too, and you can see my trades there as I post them and just general news. Thank you for watching again. May the gains be with you, and I'll see you in the next video. Goodbye.